Absolutely. Well, without further ado, I think I'm just going to go ahead and get started here. People are more than welcome to keep jumping on. I know a lot of people are in listen only mode, so definitely just let us know if you needed access to slides or maybe you had some more questions for Brent or me or anybody on the annuity team. Certainly, you know where to find us, 800-255-5055, or just email us and we'll be happy to service you. Otherwise, I'm going to go ahead and get started here. So again, thank you so much for joining our webinar. We know that it can certainly take some time out of your day, but it is all useful information, and we do record all of these webinars to our YouTube page. So if you miss it, no worries. Just have your marketer reach out and send that over right to you. So to get started, I wanted to mention first our new producer builders. So I absolutely love that we have access to this. Um, this is our new producer builder. So you have about 180 days from the time that you get contracted with IAMS to reach that $100,000 level of premium. And with that, you would get a postcard mailing or an iPad or $750 cash or pre-formatted emails, marketing analysis, corporate identity package, all good marketing things. And the reason why I like this is because this really helps you get up and going off the ground. So I was just talking to a producer yesterday that did not have access to this type of producer builder. It's our new producer bonus. And he was already going to get started paying for postcard mailings, direct mailing type of marketing. Um, and so he had no idea that he might even be able to get that type of marketing reimbursement with us. And so this is a huge advantage that I think, especially the seasoned agents that have been in the business for a while can take advantage of, because that's just the first level. It goes all the way up to the $1 million level, where you would have a core story brand builder, get published in major news outlets, 3 safe money marketing event workshops on the base tier level. And safe money marketing, I would certainly definitely ask your marketers about this program. It's a great seminar program. 8 to 10 preset annuity appointments, or 3 videos, 3 consumer facing brochures, 3 custom articles and special projects on request. That's at the $1 million level. So let's say you just get started and reach this amount of premium, again, $100,000 to the $1 million. You would get all of this and all this stuff in between. And so definitely I would highly encourage you to reach out to your marketer if you are not yet contracted with IAMS, or if you are still within your 180 days, because this is something to be taking advantage of, I would think. And you really would have a lot of access to this marketing material. And this is just a new producer bonus. You would still have your marketing reimbursement on top of it if you decided you want to write more than $1 million. Why not? We also have our IAMS business builders, increase your capital with our referred producer program. So I get asked this quite a bit. So, we also do have our agency development side, where if you're a recruiter, if you love recruiting, I have some agents that love to do that. Um, of course, you can get an override on it. But let's say you don't have any joy, you don't enjoy recruiting, but you did have a bunch of agents that you knew of because you've been in the business for a while, and you just wanted to refer them over because you knew that we could help them out with our services, you would get a $50 one-time bonus when you refer the agents. And then you would also be receiving more for any SPL, so single premium life, or multi-year guaranteed annuity, MIGA business. So with the SPL, that's 0.075%. And with the MIGA business that they write, it would be 0.10%. The life target premium, that would be 0.15% that you'd be earning as well. And on the indexed annuity, that would be 0.20%. So certainly, again, reach out to your marketer if you had any questions, comments, or concerns on that. Other than that, that's what we would be paying you as a huge thank you for referring someone over because, as you know, referrals are a huge lifeline in your business. And then like I mentioned earlier, we also have our marketing reimbursement. So we pay $100 of marketing reimbursement per $100,000 of indexed annuity premium. For single premium life, that's $200 per $100,000. And then for premium life target, that'd be $200 per $10,000. And so as you guys know, we are very talented on both sides of the life insurance and annuity side. So certainly just check in with your director. They'd be able to help you out with this if you are interested in this. We also have our high touch, high service back office support. This definitely saves a lot of our producers time. I used to be out in the field myself. If I had the type of high touch, high service that we had here at IAMS when I first started, I think I could have saved myself a lot of headache. And so we have business building tools and resources, so that's what your directors are for. We also help in case design assistance. So not only do you have your life director or your annuity director, but we also have case managers, and they are highly experienced. They come with a bunch of experience under their tool belt, and are able to quickly help you in a timely and fashionable manner in order for cases to get issued. And so we also have in-force managers that are already managing the cases that have been in force for a while. We also have a submission to commission support. So just meaning we're just really trying to get things to issue as quickly and as efficiently as possible. Any arms we have to twist, we'll certainly do that. And then we have life and annuity quotes, top sales expertise and coaching, and paperless contracting. So we do a lot of e-applications as well. Firelight is a huge one. We've just added some more carriers onto that platform, and so we're really excited about that. We have our IAMS website. This is open and available to you 24/7. On this, we have our sales resources library. We have term quoter. Um, we have forms online, so any kind of compliance documents that you may need, certainly feel free to reach out to this website if you needed help getting through the website, because it can be quite a bit if you're just getting onto that or um, learning your way around it. Definitely reach out. We have industry links, so any updates within the annuity world, life world, and such. We also have a long-term care product grid, and so long-term care is a huge thing that a lot of people are passionate about because, as you guys know, if you guys are Medicare producers, this is something that Medicare doesn't cover. So there's a huge need for long-term care. Going back to our e-app solutions, we utilize Firelight, iPipeline, and Sunfire. So we're excited about all of these things. It just makes life a whole lot easier. But I do know that it can sometimes make life a little bit harder if we're not super tech savvy. I am not the most tech savvy, but we do have a great team of people here who actually help with the e-app process. So if this is something that scares you, if you've been doing paper apps your whole career, definitely no need to worry at all. Also, because some carriers are also even doing only e-app now, we do have a team of experts here that are able to help you throughout the Firelight, iPipeline, Sunfire process. And this is our updated list of Firelight carriers that are utilizing this, as well as annuity and life business on this end. So definitely let us know if you need us to send this over to you. If you were just wondering which carriers can I write with Firelight, here they are. Just let us know and we'll send that right over. We also have our creative marketing solutions. So I absolutely love talking about our creative department because it's something that not every IMO has access to. And we have such a talented team in our creative department. They meet every single week. They're very dedicated, always here day in, day out, really putting forth their best efforts when it comes to marketing for you and putting a good face and name for you out there. And so we have access to turnkey solutions, agency solutions, and digital solutions. So we have solutions that are ready to print, customized with your information. So just making sure, everything's white labeled. So you got a logo, we just slap that on for you on any handouts, flyers, postcards, newsletters, and it's all incredibly professional and looks very, very good. And then we also have our fully customizable branding material. So if you don't have a logo or just wanted to give it a little bit of a refreshment, we can definitely do that for you. Business cards, brochures, stationery advertising, definitely just reach out for any pricing. You could also use your marketing reimbursement toward any of this digital solutions, online marketing projects. So this is one of my favorite things. Being able to put a website together for you, I think is huge. Just being able to put your name and your career out there on display and have it look presentable, professional, and very good is a huge thing. So the fact that we're able to create a website for you, I think is something that more people can have access to. We also do complimentary marketing analyses. And so this is where we take a peek at your website, any of your social medias, and we just say, hey, we think this could look better in this sense. And sometimes just having a second pair of eyes is a huge advantage, especially for putting yourself out there. We also have our IAMS wealth management team. So not only are these some of the most professional people I've ever met, super sharp. They're also some of the kindest people I've met, very, very patient. And so our wealth management side, we have the increased revenue. So they help in the money management, any kind of advisory work. Most advisors see an increase in their fixed and increased revenue when they jump on board with Duncan over at Wealth Management. And then also they have improved client retention. So now they're actually able to offer a full range of products and services. And then, like I said earlier, they're also some of the kindest people ever too that you'll meet. And so they also tend to have strengthened client relationships. So you're definitely viewed differently by your clients and your prospects as an advisor. You're now a fiduciary. So having the right tools and people helping you out in that journey, which is a totally different journey than the insurance world, it's much more hands-on. Just having the right people and the right team can make all that much difference in your career. Then we also have the Life and Annuity Academy. We actually have this coming up here in May. This is a 2-day producer training, and slots are definitely starting to fill up. So if you haven't talked to your director about this yet, I highly encourage you to, because we've definitely been working hard on the list and just getting people in. So certainly I would reach out. This is a 2-day training, and it includes our sales ideas and strategies from our top producers. We've got information on the indexed annuities, annuity industry threats, trends, any kind of updates. We also have some marketing information that's going to be going in there. You'll also have any large life case marketing options there, business insurance concepts, wealth transfer tools, sales software tools. Lots of things are going to be covered. It's going to be jam-packed in the 2 days. So I really wouldn't miss this if you haven't been to one yet. And then next, we just have our follow and like us on LinkedIn and Facebook links, and the number and our website here. If you haven't checked out our Facebook or LinkedIn page yet, I certainly would. It just helps you keep up to date. You know, maybe it's been a while since you've talked to us or you just wanted to stay up to date. Definitely feel free to follow us, give us a like on Facebook and LinkedIn, or, feel free to just give us a call. You know that over the last 30 years, we have never had a voicemail, no AI, no robots or anything. You'll always have access to a live person. And that is just our customer service guarantee. It's that high touch, high service type of quality I was talking about. And then, of course, our website, which you do have access to 24/7, www at imsinc.com. And I believe that's it. So I'll actually I'll go ahead and transfer this over to Brent. And let me go ahead and do that. Alrighty, Brent.
Excellent. Thank you.
Absolutely.
Uh,
Thank you so much for jumping on.
you bet. I'm going to make this in presentation mode here. I may have to flip the screen here. Just give me one quick second. Yep, I figured I would. All right. Let's do this. All right. Now you should be seeing a full screen. Well, thank you all for coming out. Certainly appreciate that. Kat, great job running through the information. You know, I do these about once every other month with IAMS, and I just am constantly blown away by all the tools that you provide as a BGA, and it's just some wonderful, wonderful things there. So thank you for going through that. But I wanted to really talk about some opportunities with our annuity care suite. So here at OneAmerica, we are dedicated to providing long-term care solutions for clients. And we are the only asset-based carrier out there that has both a life insurance, a whole life insurance chassis, and an annuity chassis. So very excited about that. We've got some other differences too that I'll be talking about as we go through here. But today I'm going to be focusing on our annuity care suite, so that annuity chassis, if you will, and certainly talking about this great slogan here, which I love: from tax deferred to tax free for LTC. Has a nice little ring to it, and I'll tell you exactly what I mean here as we continue to go through this. All right, so a little bit about the annuity marketplace. I'm sure many of you know this already. I don't know, we've got advisors and producers on, and you all probably focus on something a little bit different. Some of you may focus on annuities, so this, the stats are a little bit old, but quite honestly, especially looking at last year with what happened with annuities, they were so hot, they just kind of blew up. But it's a huge, huge marketplace. So, you can see over $2 trillion in annuity assets out in the market space. This is, again, a 2020 stat here, but there was 219 billion in annuity sales that particular year. So that's been on the rise, and certainly in 2023, it was a huge, huge year. We'll say that. And the average purchase age of many non-qualified annuities is right around 50 or 51 years old. So there's a reason that I give you that, and I'll talk about that here in just a little bit as well. So that's some very high level annuity statistics, if you will. But I want to ask you this: how many of those individuals that purchase these non-qualified annuities, or it could even be a qualified annuity, how many of them pass away with that annuity? They probably took it out for kind of as their safe fund. I don't know how many times I've come across portfolios where an advisor may not even know, because the clients took out a non-qualified annuity many years ago, even before they started working with their advisor, and that's just kind of their safe fund, their emergency fund. Really, they'll tap that if something happens. And it's kind of funny, and I'll talk about Gallup poll that we did here in just a minute, but we find that many times people take those out for that emergency fund, but really what they're talking about in that emergency is potentially a long care event. So how many of them pass away without ever using that annuity? or how many of them are even utilizing their income riders? So just some thoughts to think about with the annuity marketplace. So many times people just pass on that tax liability to their named beneficiaries. So here's that Gallup poll that I was talking about. So we polled some non-qualified annuity owners, and it was interesting to see the top reasons why somebody wanted to use that or what they intended to use that for. 83% of those said they intended to use that annuity to avoid being a financial burden on their children. Well, that truly is long-term care. They're protecting their family from being a burden of either the caregiver or having to pay out of pocket themselves for any care that their parents may need. So 83% intended to use that to avoid being a financial burden on their children. 73% said they intended to use their annuity for an emergency fund, catastrophic illness, or nursing home care. So again, you can see these very high percentages of why people think that they are going to use this non-qualified annuity in the future. Largely, a big portion of that is for long-term care services. There's a problem with that. Many times, the longer they've had this annuity sitting there kind of on the sidelines, just growing tax deferred, it creates a tax time bomb for either themselves as they're taking that, any distributions from that annuity, or if they do happen to pass it on to their heirs, that tax time bomb then to their beneficiaries as well. So, if we continue looking at the marketplace, we're looking at one of four main reasons that these are typically taken out. One, they want growth, right? Certainly they want that tax deferral. Could maybe want that guaranteed lifetime income in the future. But I'm shocked at how many people have these non-qualified annuities. They took it out because they thought they wanted guaranteed lifetime income later in life, but they've done so well in their investments and their portfolios that they don't want to turn these incomes on because that just pushes them to higher tax brackets. So there again, we're passing that on to their beneficiaries without ever utilizing them. And the fourth reason, to guard against those catastrophic illnesses. Well, again, that's really what we're saying there is a long-term care event. Now, I like to ask one quick question of all of my clients, and I'm just going to position this for you to ask your clients as well. First and foremost, do they have any non-qualified annuities in their portfolio that you may not know about? If you know about all of them, that's great. This is a great way to mine your book of business, to find opportunities out there, to solidify those clients that you're already having and save them potential taxes. And I'll talk about that in just a minute. But the follow-up question then is the client's non-qualified annuity where it should be? I'm going to say that one more time. Is that non-qualified annuity where it should be? So what am I talking about there? Well, the government, federal government of all people, did some really good for us for long-term care planning purposes. And it was through what is called the Pension Protection Act, or PPA, as you'll hear me refer to it probably through the rest of this presentation here. And that's really where that slogan comes from, that tax deferred to tax free for LTC. So what do I mean? Well, here's an existing non-qualified annuity in this little graph, if you will. So you can see that their cost basis, obviously they paid for that with after-tax money, so that wouldn't be taxable, right? That's what they use to take out that annuity. But the longer that they've had that non-qualified annuity sitting on the sidelines, it's been growing tax deferred with all of that gain portion. So let's just give this some numbers. The cost basis, let's say they took it out with $50,000, but now there's another $100,000 in gain. Well, that gain is all taxable. So if they left that and only tapped into it whenever they needed, say, a long-term care event or needed some income for that long-term care event, Well, all that gain is going to be taxable. So each time they take money, a distribution out of that non-qualified annuity, they're going to be paying taxes on any of the gain. So until that gain is fully taxed or used, they will be taxed on any of those distributions out of that non-qualified annuity. Well, here's what the Pension Protection Act did for us in long-term care planning. They said, look, we understand that many consumers out there have these non-qualified annuities, but let's make a way for it to become tax-free for long-term care. So if they simply do a 1035 exchange, right? Very easy process, just a new application. And I'll explain what our application process is here in just a little bit. But we're just going to 1035 exchange from the current non-qualified annuity into one of our PPA eligible annuities here at OneAmerica. All three of the solutions that we have in our annuity care portfolio are Pension Protection Act annuities. So they're all eligible for that. So now what happens is even the gain portion in this. So no matter how many years they've had that, even the gain becomes income tax free if used for long-term care. So it's a great way to plan for long-term care expenditures in the future. And if they've got those non-qualified annuities sitting on the sidelines and they're in their mind, that's used for, hey, I don't want to be a burden on my children. I don't want to, in case I ever have any catastrophic illness or need long-term care, I want to tap that non-qualified annuity. Well, let's go ahead and make it all income tax free by just doing a simple 1035 exchange. Very great opportunity out there and a great way to mine your book of business or talk to any new potential clients to find out if they've got any of these existing annuities out there. Now, we can, and I haven't gone into this yet, but we can add what's called an optional continuation of benefits rider. So the base annuity then would become all income tax free if they 1035 exchange that into a PPA eligible. But we can also add our continuation of benefits rider that can continue that same income stream should that base annuity get depleted from any of those expenditures for that long-term care event. The great news with that continuation of benefits rider, it continues that same income that they were receiving out of their base annuity for, it could either double or triple or even a lifetime of payments for that. So we've got some great options here on our continuation of benefits rider, or COB, as you may hear me refer to that. So let's really talk about the concept here. So this is a concept of a deferred annuity with long-term care benefits. Now, here's a very well-balanced portfolio, right? If you're working with your clients, you're probably doing some form or fashion of a well-balanced portfolio with them as well. You've got your aggressive funds poised for growth, but they come with a lot more risk. You've got your moderate funds, which are, again, poised for growth, but not as much risk as your aggressive funds. Then you've got those conservative funds that are really meant to preserve capital, right? Lots of guarantees, that sort of thing, all built in. So what we're going to do is we're going to reposition a portion of that very well-balanced portfolio into an annuity with LTC benefits. And here's what happens. So typically we're going to take that right out of the conservative because this is their annuity. It's going to be still their asset, so it would still fall in there. All the guarantees with this particular plan are there as well. And then we're going to leverage it for long-term care. So 2, 3, 4 times, or even up to a lifetime. So it can never run out of those benefits. And this is, an option that we see a lot of here, especially with joint cases. Now, I'm going to talk about that in a little bit as we go through here, but I will mention it right now. So we can do either a singly owned annuity with these LTC benefits or a jointly owned annuity with these LTC benefits. And I'm actually going to talk on the next slide about an eligible person provision. So when we see the lifetime benefit rider, the COB rider that I was talking about earlier, many times when it's a joint case, they will always add that lifetime COB. And why? Because they don't want to run out of those benefits. Each spouse loves the other, right? But nobody knows, who's going to need care first, how much it's going to cost, how long it's going to last. And by having that lifetime COB rider, continuation of benefits rider, that will ensure that both of them have a monthly benefit on a reimbursement basis for as long as either one of them lives. So that really puts the true peace of mind in their long-term care plan. So let's talk about this eligible person provision. If you're doing 1035 exchanges, if you've done them in the past, you kind of know that there's some rules around that. It must be like for like, right? So if it's a singly owned annuity and you 1035 exchange it, it still must be singly owned. But now they've got a spouse, or they took them out as separate annuities for whatever reason. They didn't do a joint ownership. What we can do is 1035 exchange that, still singly owned, but we add an eligible person. Now it must be their spouse, but we add an eligible person, so now both of them have access to that annuity. If it was a joint annuity in the first place, then we just 1035 exchange it and do a joint annuity going forward. So again, both have that joint access or joint ownership provision. So great option here to be thinking about with any of your clients as well for any of those 1035 exchange opportunities. Now, let's look at the timeline of kind of how this works. I get a lot of questions around this. And really what we're doing here with these asset-based solutions is utilizing the client's money first. So it's their asset that they're creating, right? It's still a part of their portfolio. It's just their asset, but we're going to use that money first for any long-term care services. So the first day of claim here, you can see that we're going to go back to that base policy, and the annuity side, it would be that cash value. So we'll access that cash value, but let's say at one point they exhaust it. So there's no more cash value in that base annuity. Well, if they added the continuation of benefits rider, that's when we continue that same income stream that was coming directly from that base policy and can do it for a period of time, so a limited amount. So in this particular case, double that amount, or we can add that lifetime unlimited COB rider. So it's a great way to really continue that same income stream. And again, if we're doing a joint case, it's almost always that we see that unlimited amount being added. All right, 3 real main reasons that we use our annuity care platform. Like I said, we've got 2 chassis, one a whole life, one an annuity. There are 3 main reasons that we really move to our annuity chassis. First and foremost is ages. So we go all the way up to age 85 for these solutions. So anywhere from 40 to age 85, you can't find more options out there to plan up to 85. That we've got the widest breadth of ages that we can actually put a long-term care plan in place. So just know that when you have your clients, we've got the widest breadth of ages. And as a matter of fact, I'm going to leave you at the very end here with a great sales idea and things to focus on right now. We can actually go up to age 87. So bear with me on that one. But again, standard, go all the way up to age 85. Second reason that we use the annuity care chassis, look, the older clients get, we understand that they're going to have probably a little more health history, right? I had my annual physical today, so it was this morning. So it was interesting. I was poked and prodded and that sort of thing. But my doctor made a very good comment. He said, even though this model's a year older, it still seems to be, doing very well. So I was glad to get basically a clean bill of health there. But as we age, we certainly get some more conditions. And he certainly asked me about some conditions that I had had prior to. They were, joint ailments or, something along those lines, maybe some knee pain or shoulder pain, but those have all gone. And so, like I said, basically a clean bill of health. That probably more than you need to know. But again, as we age, we have more health conditions, right? Well, that may preclude them from more of a full underwriting process. And so here, what we do with the health is we've got 5 knockout questions. So it's pretty straightforward there, pretty easy. If they can answer no to all 5 of those knockout questions, we do a script check, an MIB check, and then we typically turn those around or approve them within 72 hours. So yes, there is a little bit of underwriting with those 5 knockout questions, but again, a great way to maybe take an existing non-qualified annuity, 1035 exchange that for somebody who's either failed the plan or they just have a little more health history, right? The third reason is utilizing what the federal government gave us, utilizing that 1035 exchange opportunity, utilizing the Pension Protection Act, and make any of that gain in those non-qualified annuities existing into a tax-free if used for long-term care. So those are the 3 reasons. Now, we've got 3 solutions on the platform. Our original annuity care, I'll call it the OG, just because I don't know, but I like to give it a simpler name. So the OG annuity care, that was what we first came out with back in 1998. So we've been doing this a long, long time. Annuity care 2, these are more recent ones that we're seeing more business in this day and age. So annuity care 2, I'm going to give you some great ideas around that one. And then our indexed annuity care. So we've got an indexed solution as well. People like to take advantage of the upside in the market, but no downside risk. And that's exactly what this indexed annuity care is. Now, with that, I like to, there's a lot of information on this slide, and I'm not going to go through it all. What I'm going to promise you is I'm going to send this to Kat, and anybody that wants this, I call this the annuity care cheat sheet. So you kind of know which particular plan to maybe approach your clients with. And so this cheat sheet will be a follow-up for any of those that want that. So again, not going through all of this information, but this cheat sheet is available to you, just so you know. All right, so let's look at the specifications, and I'm going to start with the OG, right? The original annuity care that we started selling back in 1998. So issue ages, you heard me say 40. Well, the original one was at the early issue ages was age 50 all the way up to age 85. We can do single or joint. It is a fixed deferred annuity. And again, any of those benefits out of here would be tax-free for long-term care. So if they're just doing a single deposit, they can do that as well. It doesn't have to be a 1035 exchange. Any of those benefits are going to be tax-free for long-term care. Now, there's an asterisk here, and you'll see below here in the funding options, I mean, we can take cash lump sum, like I said, non-qualified annuities, cash value, life insurance, 1035 exchange those. We can actually take qualified money as well. I do caution you, and that's why this asterisk is here. So if we're using a qualified annuity, we can do that, still 1035 exchange it. What'll happen though, when they start taking distributions, there will be some taxes that need to be paid on that qualified source, that qualified money. So just know until that base annuity is exhausted, there will be some taxation that comes out of there because we're using qualified money versus non-qualified. So just know we have the only options out there that'll take both qualified and non-qualified money on our annuity care platform. Now, then we can also add our continuation of benefits. Like I said, we could do a limited plan. So the base policy in this annuity care, the OG, pays out over 36 months. We can do it another 36 months. So adding that continuation of benefits rider would pay out then for a total of 72 months, right? So great plan there, especially maybe for an individual. But if you're gonna do a joint here, I would always recommend our lifetime unlimited COB rider. All the funding options there and so forth are the same. The only thing that I'm going to point out here is that when you add our COB rider, there is going to be a telephone interview that will be applicable as well. So besides the 5 knockout questions, we will do a telephone interview as well. And that's really to identify any cognitive issues. So we call it the senior exam, if you will. So again, anytime you're adding the COB rider, that senior exam or that telephone will be required as well. All right, so let's look at some quick ideas or how this works in out with your clients today. So here's a female, age 81. She had a current annuity that has grown to 125,000, and it was a non-qualified annuity, and it was just kind of sitting on the sidelines. So we said, hey, let's make sure that we can help you mitigate taxes. So just by 1035 exchanging, we're going to get rid of all of the gain in that contract if you use it for long-term care. So that made perfect sense to her. Nobody wants to pay more taxes. So that's exactly what we did. We did the 1035 exchange here. So what we did though is we added that lifetime rider as well. And you can see that there's a cost to that, obviously. So we spread that 125,000 out over the base policy, again, which pays out over 36 months. That portion, 92,594. So that's in the form of a single premium, the 1035 exchange there. But the other portion is covering this lifetime COB rider. So that was 32,406. So what did that give her? Now, this is one thing that you have to remember. This is only what it looks like to start. The longer that they have these in play, there is interest that is applying to these types of contracts as well. So just like their non-qualified annuity where she had it before, this is also growing, right? So there's the good news is now we're getting rid of the taxation for that if she has a long-term care event. So what are we getting there? An annual benefit of 32,208 over that 36 months, or 2684 is a monthly benefit. But remember, she'll get that as long as she ever needs. So anybody that has any health history with some longevity, or people have gone on claim on long-term care claims and have lasted for many, many years, 5, 10, 15 years, gosh, this lifetime rider is something that they will probably gravitate to very quickly. So I wanted to quickly show you that. All right, another way of designing this though, and this is just my personal opinion here, I would probably prefer to do it this way. Look, a lot of people like to do a one and done solution. I just want a 1035 exchange it and we're done. We don't have to, no more premiums due, that sort of thing. But here's a good way to do this. So they, just in case they would never need long-term care services, again, high likelihood that they're going to need them, but in case they never did, now we're not getting a large portion of that annuity in terms of a insurance cost for that COB rider. So we're going to put all 125,000 into the base policy. What that's going to do is beef up her annual and monthly benefits. So she's getting more. Again, remember, she's 81 years old. You don't find too many avenues out there for planning at this age. So getting more benefits because we're putting it all into that base policy. However, she still wanted that lifetime rider, but she didn't want to pay out of that current annuity. So we're going to create an annual premium for her. So that annual premium, $54.60, that will continue that same lifetime income stream as long as she would ever need care for. So again, a little bit different makeup. And some people, again, I've come across many advisors that say, I just want a one and done it. Okay, great, we'll do it that way. But what if they never need it and want to pass more on to their beneficiaries? That's why I'm in favor of this annual pay rider. Just my personal feelings. All right, so that's the OG, original annuity care. Now I want to go into annuity care 2 really quickly and just mention that the annuity care 2, here's where it's different. The base policy will pay out in 24 months versus 36 months on the OG, right? if it's a single individual. If it's a joint case, it'll pay out over 30 months. So we're basically what we're doing is suppressing the amount of time that that base annuity will pay out. What does that do? It actually increases the LTC benefits out of that. Because if you're paying for it over a shorter amount of time, it's going to increase those benefits because of that. So again, here's your differences: 24 months for a single, 30 months if it's a joint case. So again, we can do single or joint here, 40 up to age 80. Now we stop at age 80 here and we go down to age 40. And there's a reason why I kind of point this out and why we stop at age 80. So just like our whole life chassis, we stop at age 80 here. It's still a deferred fixed annuity, still tax-free for LTC, but the difference here with Annuity Care 2 is we automatically add the continuation of benefits rider. So this is not one where you can choose it. It's an automatic leveraging of whatever amount they use as a single deposit or a 1035 exchange. And that really depends on what their ages are. So from 40 to 69, we're going to leverage that up 4 times. So, it would pay out over 72 months. If they are 70 plus, we're going to leverage it 2.5 times. But remember, this is the only annuity care solution where the COB is built in. And so that will automatically trigger that telephone interview, that senior exam as well. So remember that as well. But I like this one because it's very easy to explain. It's just your straight leverage play. So let me give you a quick example. Here's a female age 65. She had 100,000. It could have been cash. It could have been a current annuity. Didn't really matter. But let's say she has 100,000. We put it to the base policy here. So 100,000 comes over. That gives her $50,400 as an annual benefit, or $4,200 as a monthly LTC benefit. But because we built in the COB rider, it gives her 4 times leverage. So basically, she gave us 100,000. She now has a total pool of 400,000 that will pay out over 96 months here. So great way to simply leverage that money for any long-term care needs. So pretty straightforward there, very simple. Again, because she is under age 69 or up to age 69, we've got the 4 times leverage. 70 to 80 will be 2.5 times leverage. So not quite as much, but still a wonderful solution just for very simply leveraging the amount of money coming in for any long-term care expenses. All right, the last one on the platform is our indexed annuity care solution. Like I said, people like to take advantage of the market upside and no downside risk. That's exactly what a fixed indexed annuity is, right? Now you'll see a little bit of difference here. Again, we're back to the base policy of 24 months for a single, 30 months for a joint. 40 to age 85, and we can do base only or adding that COB rider as well. But here's what we do. We base the index off the S&P 500. So there's 5 different crediting strategies that they'll have. All the funding options are available. I'm sorry, those 5 crediting strategies are: 1, there's a fixed account, right? There's your annual caps and pars. So those are your 5 options as far as the annuity account value in and of itself. But just like the other annuity solutions, we've got the COB additions that we can add. And here's again a little bit of difference. We can do, double the base policy, triple the base policy, or again, if it's a joint case, I would strongly recommend using that lifetime option. So let's look at a couple quick solutions here. Here's a single pay, so one and done, female age 70, had a current annuity of 150,000, put it all to the base, we're spreading that out between the base policy and the lifetime COB rider. So 112 goes to the base policy, 37.5 goes to the COB rider. What does that get her? 56, almost 5,700, 57,000 as an annual benefit, or 47.31 as a monthly benefit. But again, she'll get that for as long as she would ever need with this lifetime benefit rider. We differ in this market space by the lifetime rider, so that's why we're showing that here. Now, again, we can annual pay that rider. It's still my strong feeling here of a better way to do this, but again, that's really up to you as the advisor and the client in and of themselves. So by annual paying the rider, we put a whole $150,000 into that base policy, beefs up those benefits, right? Now $63.13 is a monthly benefit, or almost $76,000 as an annual benefit. But we have that annual premium here of $43.75. Not anything too out of the ordinary. Take maybe some gains from their account to pay that annual premium, but that will guarantee all of these LTC benefits for as long as she would ever need. So really like that solution as well. All right, very quickly, underwriting, right? So with annuity care underwriting, there's no parameds. So we take that long tent out of that pole, if you will. No APSs. So again, that's really where that long pole comes from. There is a brief interview, that senior exam, if that COB rider is added, but if it's not added and we do a base only, then there's no telephone. It's just the 5 knockout questions. Well, here's your knockout questions. These are very simply really long-term care questions, if you will. So if they're not receiving long-term care today, they're going to typically be able to answer no to all these questions. Here they are. Do you currently use any mechanical devices? Wheelchair, walker, oxygen, motorized scooter, quad canes, that sort of thing. All right. Pretty straightforward there. Do you currently need or are receiving help with any of your activities of daily living? Again, if they're not on claim, they should be able to answer these no. Do you currently have or ever been diagnosed with Alzheimer's, dementia, multiple sclerosis, muscular dystrophy, Parkinson's disease? Those are your knockout questions. So a few more in there, a few more conditions, but those are really all long-term care conditions. Again, not on claim, don't have these, answer no, that's great, we move on. Have they ever been diagnosed with AIDS or AIDS-related disorders? Take HIV out of there. We have removed that portion, but it's AIDS or AIDS-related disorders. If they can answer no, again, move on. The last question there, are they currently receiving or have they ever received Social Security disability benefits? Again, answer no to all those questions. We do that script check, we do an MIB check, and typically approve those within 72 hours. So here's a great opportunity for you, and I think one that I really wanted to leave you with before we open it up for any questions. It's a base-only solution. So ability to use that penalty-free for 3 years, because I'm going to do the OG original annuity care here. No telephone interview and all tax-free LTC expenditures. So let's look at what that looks like. Another example here, female age 73. You go out, you find your clients that have had these annuities for a long period of time. You're going to find some pretty large current annuity values, right? So here's $350,000. Well, she could leave it and pass on any of that taxes or be taxed on any of that if she needs care, or just do that 1035 exchange and just do a base only solution. So ensuring she's going to use that over those 36 months. So what does that give her by just doing that simple 1035 exchange? $121,740 as an annual benefit, or $10,145 as a monthly benefit. Great way to really utilize that existing non-qualified annuity, make it all tax-free if used for long-term care. But remember, that's just a point in time when they take out this application. So let's look at 12 years later when she's 84 and what's really happened with this, because that's likely when she may be needing claim. That's right in the average time frame from 80 to 84 when they may actually claim. So now that annuity, that current annuity value has grown from 350 now to 481. So it's not like you're not growing that money anymore just by 1035 exchanging. But now we've made it tax-free if used for any long-term care, which is great. So the annuity's grown, the base annuity still pays out over that 36 months. Here's your guaranteed interest rate, right? The actual interest rates are higher right now, but the guarantees, so based on the guarantee, after 12 years, now that we're going to give her an annual benefit of nearly 180,000 per year, or nearly $15,000 per month on a reimbursement basis. So again, look for those base only solutions. 1035 exchange those, get rid of that taxable event. Now let's look at that same situation, but just add a male. So let's do a couple here. So female's still 72, but the male's age 73. Well, because they've got a joint annuity, it's now at 500,000. They probably started, earlier or put more in. So a 500,000 current annuity pays out over 36 months. Annual benefit at the start of this whole program here, 173,916 is an annual benefit. Nearly, 14,493 is a monthly benefit. But again, let's look at that 12 years later. What's the growth of the guaranteed rates? What does that look like? That 500,000 is now grown to 687 or 688, basically. And it's grown their benefits over that time span. But again, this is a base only solution that will pay out over that 36 months. Why I like this still is we're going to make sure that we can mitigate those taxes. So ways to help your clients mitigate taxes, this is it right here. Let's just 1035 exchange those existing non-qualified annuities. So we can actually go all the way up to $1 million, and we'll pay full comp up to the $1 million on those base only solutions. So I thought I would mention that as well. So with that, Kat, I'm going to open it up if there are any questions there.
Absolutely. If you guys have any questions at all, I definitely would love to hear them. I'm sure Brent would too. We could answer them. That was a really great presentation.
Thank you.
Yeah, absolutely. I definitely will be listening to this over again. It was really good, jam-packed with a lot of stuff. Really
There's a
good.
lot there, a lot there, a
Oh,
lot of great ways to, mitigate those taxes. So
oh yeah. This is why I bet One America is leading in long-term care right now
that's exactly right.
on annuities. No, I can see why. So I think we had a question here.
All right.
Um, so I have, what is One America position for allowing an IRA FIA to be surrendered to transfer over to your IRA long-term care product because she wants long-term care? She does not need
So
this money, but is very worried about long-term care.
sure. No, that's a very common scenario out there. So thank you for asking the question.
Mhm.
As I told you, we have two different chassis, our whole life chassis and our annuity chassis. In that particular scenario, with those qualified dollars, I would rather put them in to our whole life chassis. And we've got a great way of doing that. So utilizing those IRA dollars, we do a direct trustee to trustee transfer. So no taxation there. We then give it an automatic 25% bonus right off the top. So let's just, for simplicity's sake, let's say that there was 200,000 in that current IRA. Direct trustee to trustee transfer, we give it that 25% bonus. We add another $50,000 to that current qualified annuity sitting now at One America. So we now have 250,000 to draw from, but we're going to utilize that in a 10-pay whole life and COB rider scenario. So we're going to break that 250,000 down into 10 equal parts to fund that solution. So what happens there, that 25,000 then distribution over those 10 years is taxable, because again, it's coming from a qualified to a non-qualified source. But what we're doing there is spreading out that tax risk. The great thing about that solution is the fact that you can utilize qualified dollars. We can still do it on the annuity chassis. I just like that solution much better when we've got those qualified dollars. So on either chassis, we can use qualified dollars, but I really like our whole life chassis. It's a simple one and done solution, even though it's paying out over 10 years. And there is the taxation piece for that, but that really fits well with the Secure Act rules, meaning that if you've got a non-spousal inherited IRA, it fits well within the 10 pay. You must drain that in 10 years. So that's a great utilization of the new Secure Act rules for any non-spousal inherited IRAs. And we could even use it as kind of a gifting strategy. So maybe somebody later years wants to, give their children a plan. They want to use their IRA dollars, and we can fund the children's plan that way. So a lot of, I don't have any slides around that right now. This is just, it was a loaded question, I guess, if you will, but a lot of information there. But again, work with your marketing professional there at IAMS. We can get you as much information around that as you would like.
Absolutely. And that was coming from Michael Lally. So, Michael, definitely feel free to give us a call, or we'll even reach out to you on this, because I noticed you had um, quite a bit of information to pick our brain on. So, we're definitely happy to reach out to you in regards to this. So, we certainly will be reaching out here. I had a couple more questions, it looks like. Um, So Deanne asked, can we 1035 an old life policy with an accumulated money? And if allowed, what happens to the basis with or without the long-term care distribution?
Yes, great question as well. We can take those life insurance cash values as the 1035 exchange. That also would become tax-free for any long-term care purposes. So, the like for like provisions there does allow from life to annuity. We just can't go from annuity to life. So yes, we can take
Like
those
to like.
1035. Yep. So great question.
Uh-huh. Yep. And I'm seeing oh, that was from Dimitri. Yep. Okay. And then I only had one other comment. It looks like it came from Jan, and so my apologies, Jan. If you didn't see anything, I hope that it got resolved throughout the webinar. If not, definitely give us a call, and we'll be happy to fill you in on any of the information. If there were any other questions, please feel free to reach out. I think Calvin had his hand raised for a second there, so Calvin, if you had anything you wanted to ask, definitely reach out.
Well, I'm going to say thank you. I think, Kat, you've got a couple questions you wanted to put up there as well. So I think I maybe need to turn this back over to you.
Yeah.
Here, one moment. Let me
Thank you
do
so
that.
much again, Brent. I truly
Yeah.
appreciated this. And like I said earlier, I'll be rewatching this, listening to it, really just taking it all in.
All right. I'll stop showing my screen. Well, maybe. Did I get it back to you?
Let's see. Use microphone. It says waiting to view.
There
I
we
think
go.
I know mine now. Yep. How's it look?
Yep, I can see yours. Great.
Perfect. Well, I'm gonna go ahead and put my polls up there, and then if you needed anything, Brent, from us, definitely feel free to reach out. We're very, very happy and excited for our partnership with One America.
Wonderful.
Alrighty, so let me go ahead and put this up there.
I hope you all do.
Yes, I sure hope so too. It's a great product. Like I said, I use the pen until it runs out, and then I just grab another One America pen. It's got a highlighter on the other end of it. Perfect. I think that just closed out. Okay, would you guys like to get contracted with One America? And we'll go ahead and have your director reach out to you on that. And if you are not yet appointed with IAMS, we'll certainly get that going for you. Perfect. And I think I might have one more here. Perfect. All right. Well, I'll go ahead and close this out. Thank you again so much, Brent, for your time. And yeah, you know where to reach us all, 800-255-5055. I truly hope everybody is having a great week so far and that you found value in this. We will have the recording of this on our YouTube channel. And when in doubt, definitely just give us a call and we'll be able to answer anything and everything for you. Thanks again.